Hi and welcome to Westpac's End of Day report for Wednesday the 10th of August. On equity markets in Europe, things started off okay. We saw some catch up to the late rally on US markets that occurred after the Fed anticipated that it would hold rates at close to 0% for the next 2 years. That of course that rally happening after the European markets close. We had the Bank of England come out and downgrade its growth view for the UK. And their latest projections show inflation in 2 years' time a little bit below the 2% target, and some of the commentary from Mervyn King suggested that it was not outside the realms of possibility that the Bank of England could embark upon a further round of quantitative easing at some future point. That actually is our view at Westpac. We're looking for that to start again, further asset purchases in the early part of next year. But heading into the US market open, we had some disconcerting rumours stories start to spread about one of the major ratings agencies potentially stripping France of its AAA rating. French bonds currently trade 90 basis points higher than German bonds, also AAA rated of course, and the cost of insuring French debt has risen sharply of late. And there are issues related to the size of the French budget deficit, 7% of GDP last year, 6% perhaps this year, compared to between 2 and 3% for Germany. So there are issues there. All the agencies denied that they were about to strip France of its AAA rating. Nevertheless, concerns really remained, and the focus shifted very much to the French banking sector, which does have significant exposure to the problem governments in Europe. And we saw French banks marked down hugely. At one stage today, SG was down by almost a quarter, 23%. And at the close, SG was down 16%, with the other French banks also marked down very sharply. Actually, from peak to trough today, the German market saw a range of about 10% again today, as it did earlier this week. In Germany, actually, Commerzbank announced a write-down of almost $1 billion because of due to its exposure to Greece. There's a lot more of that news to come from a whole range of European banks, believe me. So at the end of the European trading session, we saw the FTSE down 3%. We saw the French market down 5.5%, and the German market down 5%. The Spanish market also down around about 5.5%. So significant losses there. And in fact, at about the time the European market closed, the US market actually had given up all of its gain that it made in the late session yesterday. Although as I speak, and it's 10 to 6 London time, so still 3 hours or so to go on US market trading. As I speak, the Dow is down 3.5%, and the broader S&P measure of the stock exchange there is down 3.25%. The banks have been hit hard in America as well. Bank of America, for example, down I think 7% today. Citibank a similar loss. Actually, in the UK, Barclays was down almost 10% today. So it's banking stocks right around the Northern Hemisphere that have been hit hard today, although the concerns initially were centred on France. And of course, with banking stocks going down, concerns about the global economy were heightened again, and so we saw a more broad-based sell-off of equities take place. Remember, a couple of hours of trading still to go. Things can change in 2 minutes in this sort of environment, but for the time being, it's looking very, very bearish on stock markets. The SPI futures index is implying the Aussie market will probably open down around 2% later on Thursday's session, although of course that could change. On other markets today, commodity markets, we saw gold up another 2%, 2.5% today. It's at $1,785 an ounce at the moment. At the other end of the scale, the likes of copper prices down another 1.5%. The oil price, crude oil, $81 a barrel at the moment. That's actually up about 2% compared to where it was yesterday. The Aussie dollar is trading 102.30 at the moment. At the very early in the London session, it was just below 104 against the US dollar, dipped to around 102. It's a little bit just off, so it's just off its session lows at the moment. In Australia today, the highlight on the data front will be employment figures for the month of July. At Westpac, we're looking for a 15,000 increase in jobs and for steady unemployment at 4.9%. Anything significantly divergent from that, particularly on the unemployment rate, could certainly impact on expectations about the next interest rate move from the Reserve Bank. But frankly, I think in the current international environment, I think that will dominate, and certainly we're still very comfortable with our view at Westpac, particularly given the fall in consumer confidence we reported yesterday, that we'll be seeing the Reserve Bank cutting interest rates by the end of this year. Okay, that's it for now. I'll be back again tomorrow, and thanks for watching.